My name is Linda Burrell with Real Estate Unleashed. Thank you for joining us today. Today, I have Kevin Svoboda, a loan officer, here to talk about our current interest rates. How are you doing, Kevin?
I'm doing fabulous, Linda. It's great to be here.
Thank you for coming. We appreciate you being here. We're looking for some good information on your expertise in the lending industry.
I've been in the loan industry, money industry here, lending for about 17 years. I really like to find out beneath the surface what's going on, which brings us to the current state that we're all experiencing right now. We've had some issues very recently here with the banking industry and with SVB failing, and Credit Suisse went over, and over the weekend there was about 22 more banks that now are being investigated. FDC only has so much money, about $100 billion, available to bail out. I mean, you've heard it, your deposits are insured at $250,000.
Correct.
Well, that adds up when you have tens of thousands of accounts that want to get their money out. What we're looking at here, since that happened, the 10-year Treasury bond is an indicator of mortgage-backed securities of interest rates. It's not directly correlated, but it has a good effect on it.
Okay.
And that was ratcheting up. January was like 1.5, 1.6 of last year. February it started ratcheting up, and we hit as high as 4, and that was what jacked up rates to 7%, and it just put the brakes on all the real estate transactions, and people were saying, I don't qualify anymore. I did it 4%, but I don't qualify at 7%. This is killing the industry. It really, people buying houses.
It is. And, for me, I deal with pre-foreclosures. That is my specialty. I enjoy working with homeowners that are behind on their mortgage, and we also help them with loan modifications. We send them through for a waterfall review, and most homeowners are wanting to keep their home because it's post-pandemic issues. And what we are seeing right now going on in the market, that the homeowners have been in the homes 15, 20 years, and now the mortgage companies are telling them that their home is now unaffordable. So they can't sustain the interest rate hike, and they're losing their home that they've built all these years and have their equity in it, and they're watching their wealth that they thought they had for retirement disappear before their eyes.
That's correct.
We had a loan modification approved the other day for 7.5% interest rate.
And they were probably at 4% when they started.
I think she was a little higher for her, so it wasn't such a strain. I think hers was like a 5.5. So her monthly payment didn't go up much, but it did go up with about $300. So that's still a significant amount that a homeowner has to come up with, because some people are only making $300, $400, $500 a week. I mean, it depends on their industry, what they're working, what they do.
Back to the overview of what's happening with interest rates, because we've had this recent failure and collapse of the bank industry, the Fed now has to reassess this. They want to do another quarter point increase. They wanted to get it up to about 4.75 or so.
Yes, I believe it's a 4.75 is what we're looking at.
They can't keep doing this because it's not stopping inflation. It's just flooding the market with money, which is a definition of inflation. Too much money chasing too few goods.
Yes.
And we had the pandemic relief where they had 1.7 trillion, and that's just too much velocity of money. We had a whole breakdown of the supply chain.
Correct.
So it's not rocket science that we have inflation with too few goods and a flood of money on the market right now. If they put the risk of locking up four wheels on everything going forward with this continued raising of the interest rate, it's probably we're going to have actually a reduction by late summer, the fall, if not maybe a little sooner. It have to come back down again. They have to, because this is not sustainable. And interest rates will be retreating back to under I'm not going to say a number because I don't know, nobody knows, but they are going to be coming back down. They have to.
Yeah, that's what I'm seeing, is that we can only go up so high. What they're doing is pushing market values of homes down, and sellers are not. They're losing their equity on a daily basis. We have properties on the market right now, and buyers are coming in wanting to offer $50,000 to $100,000 less. That's how they're offsetting the interest rate, by offering the homeowner way less than what they're listing it for. And it's disheartening, because they're losing their equity, and the homes are sitting on the market longer.
That's true. They also think it's a self-correcting mechanism. That's the beauty of what we're here. Maybe they were priced $100,000 more than they were really worth. Okay, and it was the greed factor, which human nature kind of goes back to. And if the seller and anybody can be greedy, they'll get more if they can.
Yes.
If it's not worth that much, then it's not worth that much. The price is based upon what the market will support.
Yes, and I think we're definitely turning back into a buyer's market at this point.
Yes, it will, and that's just the ebb and flow of any cycle of business. So that part's normal, and I'm actually glad that we're seeing prices come back to normal. I mean, if you want to call it decrease, it was just kind of inflated to the point where it just made no more
It
sense.
was due to supply and demand. When we went through the pandemic, nobody was selling their homes; they were living for free.
That's right. That's
At
right.
least so they thought.
So, the big picture that people want, and, I can talk about closing costs and current interest rates, credit scores. I do a lot of credit analysis and optimization to get people qualified, primarily focus on FHA and VA programs. People with more challenging credit scores below 620. Almost all the businesses or mortgage companies I worked for always had a 620 minimum. And I've been able to qualify people down to a 580 for FHA. And that's generally 3.5% down, and have down payment assistance programs as well available. It's more right now, people are just waiting for normalcy to return to this crazy market. And they should, and they are, because it will correct. And it's just kind of uncertain as to how bad this new problem with banking is the system and FDIC, how much panic, I guess, gets presented out there. And again, I use the analogy of toilet paper during the 2020.
Yeah, there was no toilet paper on the shelves.
I know, it was like stupid. And, the greed factor, people thought they could, buy
hoarding.
20 rolls and then sell it on Amazon for, $1.50 a roll.
Yeah, yeah.
And it's like, don't do that. Don't
Yeah,
do that.
we're all in this together.
Right.
We went through this. This was not, I always think back about the 2007, 2008 subprime crash because this reminds me of that. It's a very similar mechanism because interest rates are going up, inflation's up. A lot of people are still on unemployment because they make more money
They make
on
more money.
unemployment than actually working in the work sector. And so I look at this aspect of what we're going through right now, and they hoard. And people are scared, and people are on a freak out mode right now.
Yeah.
They don't know which direction we're going to go in, and people are literally scared right now because savings is just diminishing. Retirement is leaving out the windows as fast as it can come in. It's a very disheartening and stressful, uncertain moment for a lot of families and homeowners, and even if they're not homeowners, even people that are renting, they're watching their wealth that they thought they had prepared for future, need go away.
I'm a landlord too. I'm a multifamily guy because I realized as an investor that was the best bang for the buck, and I'm happy to talk about that because it really is. But what we had to happen in 2021 was the rents just went up everywhere. I mean, it just got stupid, where people $300 a month increase is
Absolutely.
it's just unnecessary and greedy.
Yes.
And I'm sorry, but I just don't like greedy people. And there's no reason for it. There's no justification for it. It's
No.
just greed.
People don't understand it. You make more money by making it cost effective and a reasonable amount of rent where renters can afford it.
Right.
And they don't bail out or not pay you. And now you have to evict them.
Now you got a victim, right?
Yes.
And, just the old golden rule, treat others as you want to be treated yourself.
Correct.
And if you just follow that principle, it would work here. I just want to help people qualify and owning a home. And that way you have control of it because rents go up every year.
Yes.
I mean, I don't raise mine very much, but, they go up because the taxes go up.
Exactly.
So to stay at a par level, you need to have some kind of balancing here.
And a lot of homeowners don't know. I've run across many of them that don't even know that they can file for homestead exemption and get their taxes reduced. And a lot of them that escrow are unaware that they actually have a choice to pick their own insurance. All they have to do is find an insurance carrier that is providing them with adequate insurance that's cheaper. They send it over. They will send it directly over to the mortgage company. The mortgage company will pay the bill. and it will reduce their income. I mean, reduce their monthly payment. If principal, taxes, insurance, right? Principal, interest, taxes, and insurance.
Yep.
So if we reduce the insurance,
PITI, pity.
exactly. And if we reduce the insurance and the taxes, we won't have so much pity.
Right.
When it comes to making those
Let's
monthly
reduce the
payments.
pity, okay?
Yes, let's reduce it. But they don't know, and it's a very simple. It's simple. Fix. Just do a couple little extra things. So I have one other question for you today, Kevin. I see right now that as of today, we're at a 6.6 for interest rate for a 30-year mortgage, right? They're projecting, Fannie Mae is projecting that by the end of the year, we're only going to go down to a 6.3. Do you feel that that's about average? Do you think we're going to go down any more? Do you think interest rates are going to continue to climb?
I don't think they're going to continue to climb. Nobody has the crystal ball to say 6.3 is 5, 6.4. If what I'm seeing to this week and with this banking situation, I'm not going to call it a crisis, doesn't improve. It depends on what the Fed is thinking about doing. Now, the bond market already has pre-priced what that's going on. And Wall Street knows what's going on before you and I do, right? It's already priced in, the bond market's already priced in before they make an announcement on the news, or the radio or whatever like that. That's already priced in. So it's going on right now as to how bad this banking situation if it accelerates and the panic takes over, then all bets are off. But rates could come down below 6% temporarily just to get, if it starts running away. They're not going to let it run away.
Okay. Well, that's a little bit of a comfort. They won't let them run. They won't let it run away. But how far are they going to let it run?
They won't let them run. It's an uncontrolled demolition. They won't let that happen.
Do you think we're going to see something similar to what we went through in 2007, 2008 subprime crash as the market continues to progress?
The reasons for the 8 crash and 7 crash are completely different than what's going on right now. That whole subprime thing was just basically people got loans that could fog a mirror. You could give your dog a loan and they could get it.
Heartbeat.
And there was a lot of fraud going on with appraisers and builders, inflating values. The title companies all got together. The three of them kind of controlled the location and prices, and there were fake buyers that qualified,
right?
They call them straw buyers, qualified and didn't make a payment. Well, you had hundreds and hundreds of people doing that. We don't have that going on now. And Frank Dodd law that was passed in 2010, I think it was. The CFPB was initiated then as Consumer Financial Protection Bureau. That's a whole other conversation that we won't get into now because it's
lengthy.
I'm not going to even go there now, but I will be happy to in the future because
Absolutely.
that's a government agency which is unaccountable to anyone or anything. It's actually like a black operation. It doesn't get its money from Congress. It's really scary how they set it up by design. It was just control the situation, but it's not. What we're going to be looking at is a different reason for foreclosures coming forward.
Yes.
The end result is going to be foreclosures and a lot of deferments and forbearances.
Correct.
And as you said earlier, the people aren't going to qualify for that, and they're not going to have any options except to sell, hopefully, before it gets a deed of lieu and foreclosure or get a notice of it.
And that's one of my concerns is that because now the homes are considered unaffordable and the markets are declining and homeowners' interest is compounding daily from their arrearage and their delinquency and all the fees and costs that's being added on, their equity is disappearing, and they're going to have to do short sales. And that's why I feel like we're going to go into a market recession, so to say, where our home prices are going to drop and properties are going to be, a lot of them is going to be short sales, where they're going to have to do a short sale because there's no equity left in the home, and it's either foreclose, give it back to the bank, and that's not a guarantee. If you have any liens on your home, they're not going to take it back on a deed in lieu. So the only other option would be to short sell the property to get out of the debt so you don't have a foreclosure on your credit.
You've described it almost to the T. That's exactly what I would say and how I see this happening.
Yep, that's what I'm seeing from my previous experience in 07, 08. I've sustained the market in Florida at that time. We had properties that were about $200,000 and they were worth $70,000 overnight. And that's where I learned how to do short sales, because I had to do them with my own properties. So it was a personal thing. I had to do it. There was no way we could sell them. My final question that I have for you today is that I saw yesterday on Bankrate that they're predicting that we're going to go into a recession by the end of 2023. What are your thoughts on that?
Everybody has an opinion, and it's being spread out there. Yes, we are.
Yes.
There's no question about it. Some analysts are saying that we're already kind of getting there. Now, the job, it's confusing, and we have a conundrum here because there's still employment going on. And it's kind of, everybody's scratching their head at the Fed. Some of these people are going, well, how come we still have people being hired if we have a recession? And there's all kind of ways to play with the numbers and statistics to make that appear to be what you want it to do. Like inflation. Everybody knows inflation is more than 6.5.72%, right?
Yes.
You go to Tom Thumb or thing, you see groceries, it's 30%.
Yes. Look at chicken wings. Chicken wings are out the ballpark. I mean, I'm just flabbergasted over chicken wings.
And the consumer price index, they always take out fuel.
Yes.
And housing.
Food.
And it's like these two big factors of what predict it. Well, why are you taking that out? To make the numbers lower.
Yes.
To deceive the people. Well,
it is a deceptive
We're smart enough to figure out that inflation's not 6%. We're probably in a recession. I would say. I
think we already are.
I think we are too.
I mean, if you really think about it, I'm watching homeowners get denied on a daily basis to keep their home, and they're being forced to sell their homes, and people are broke. I mean, literally, they said before the pandemic, they had money in the bank, they had things going for themselves. They had business owners had to go out of business. Homeowners have been sick from the pandemic and different things that's happened throughout the time. The stress factors that are happening when people are dying, they're getting sick, and they're not able to sustain what's going on right now. It's really touching home. This is a global issue that we went through. It wasn't like 07, 08 where it was a regional. This is global. The entire world went through this pandemic, and we're all still suffering post-pandemic. The pandemic may not be as severe, but the aftermath is still here.
Yep.
And we're still suffering that.
That's in a nutshell. That's a great summary of what we're experiencing right now.
Well, Kevin, thank you today for being here. You're a wealth of knowledge, and we look forward to having you back. And if you need any information on how to reach out to Kevin for your loan needs, you will be able to receive that information at the bottom of our screen. Thank you.
Thank you very much for having me.